Most likely you are watching this video because you are interested in learning about selling a business. But for a moment, let's imagine you are on the other side of the table. Let's imagine you're a corporate executive on the buy side whose main job is to acquire companies. Your board of directors has given you a target of $200 million, and they've told you to invest that money over the next 12 months. They want you to acquire companies that offer the highest future growth rate and the lowest projected risk. Well, there are two ways you can deploy that $200 million. You can buy one company for $200 million or a number of smaller companies for a sum total of $200 million. Which one of those two strategies would allow your company with its resources to produce the highest future growth rate at the least risk? Buying one company or a number of smaller ones? I'm certain you realize that the smaller ones always grow faster. How about which targets have less risk? Putting all of your $200 million into one acquisition or spreading the investments out over a number of acquisitions? As you probably guessed, spreading the $200 million across more investments lowers the risk. Buyers figured this out 70 years ago, that the middle market is inefficient because you have to do a lot more deals to get your $200 million deployed. But the middle market tends to produce the highest future growth rate with the least risk. And yet people believe the opposite is true. One big mergers and acquisitions myth is that people assume big companies only buy other big companies. Why do they believe that? Well, first of all, we often don't hear much about smaller deals. Let's say you're a business owner, and we'll call him Max, sells his company for, say, $14 million in cash. That is likely big news in Max's household, but it's not big news to the Wall Street Journal. Typically, nobody writes articles about that size of deal. And then you've got guys like Warren Buffett. As we all probably know, Warren Buffett and Charlie Munger run a company called Berkshire Hathaway. And Buffett says routinely, Charlie and I are elephant hunters. That's what they say. We only go after big deals. That makes people think Berkshire Hathaway only buys big companies. But guess what? The opposite is true. The vast majority of their 800 acquisitions over the last several years were add-ons or bolt-ons. And add-on or bolt-ons is where a division of a really big company buys a really small company.